So, good morning, everyone. I hope everyone is doing well today. So, Ankur, I really appreciate your thought, but this is a very hypothetical situation, as you yourself said. So, it is very, I would say, it is quite near to impossible that the exam would get cancelled because of COVID-19. So, good morning, everyone. I am Mansi Anand. I am your mentor for RBI Grade B examination. I am an alumni of Delhi School of Economics and a GRF holder in Commerce and Management. So guys, as you all must be knowing that today we will be discussing a few questions, and with the help of those questions we will discuss some concepts which can be really useful for you if you are preparing for RBI Grade B examination. So you all know how tough it is, how competitive it is, and it requires a lot of courage and determination and passion to clear this exam, right? So I think we should not waste any time and begin with the session, right? So guys, before moving to question number 1, I would like to ask you to subscribe to our channel, that is anujindal.in, which can be really helpful for you in your preparation. And don't forget to press this bell icon, as it will help you to stay updated with a lot of news regarding different competitive exams, right? So good morning to all of you. Guys, here is your first question for today. And this question says, on February 26, 2020, India notified a decision to allow up to dash foreign direct investments in insurance intermediaries. So this is your keyword, guys, that you should look out for: insurance intermediaries and foreign direct investments, right? So I'm waiting for your answers. Here are your options. You have to select the correct one out of them, right? I'm waiting for your answers. So it's very good to see that you're answering so quickly. So all of you say E, right? So all the votes go to E. Let's see what the correct answer is. So all of you are correct, as the correct answer is E. India notified a decision to allow 100% FDI in insurance intermediaries. So guys, here your keyword was FDI, that is foreign direct investments. So guys, we have already discussed about FDIs and FPIs in an earlier video. So I hope you do remember what is the difference between them. So FPIs are the investments which are made for short term, whereas the FDI investors, they invest for long term in different assets. So usually investors investing in FDI, they buy land, they invest for a controlling stake in companies. So they have a long-term perspective. They want to invest their money for long term so that they can reap the benefits of their investment at a later point in time. Whereas FPI investors, they are usually looking for benefits in short-term movements of stock prices and share prices. That is why they are called foreign portfolio investments. So I hope you do remember all this, right? So India allowed FDI in the field of insurance intermediaries. So guys, here you have to look out for this word, that is intermediaries. Don't confuse it with the insurance. So there is difference between the two terms. First is insurance. Insurance companies are the companies that provide you protection against unforeseen circumstances, right? But insurance intermediaries, they are different from insurance. Although they both belong on the same path, but still insurance is the main business, whereas insurance intermediaries, they are the supporters. They support this business of insurance, right? So let's say there is a person, and this person, he wants to buy an insurance policy for his life, right? So do you think he would directly go to ICICI or HDFC or Bajaj Alliance or any other company dealing in insurance business? Usually this person would be contacted by an intermediary, and that intermediary would help this person to secure this insurance contract, right? Any doubts till now? Okay. So back to insurance intermediary. So guys, you can see here, insurance intermediary, it acts like a bridge between insurance provider and the end customer, right? So here is the company providing insurance, here is this person. Between these two entities, there is an intermediary. So these intermediaries, they can be of different types, right? For example, there can be an agent, there can be a broker, a surveyor, or a third party administrator, right? So agent is the person who tells the person who wants to get insured about the different investments options available. Broker also does the same job, but the difference between the two is this agent can sell the insurance products of one company. Let's say if he or she is an LIC agent, then he would be dealing in LIC's insurance products. But a broker can deal in multiple companies' products, right? So this is the major difference between the two. Whereas a surveyor, what does a surveyor do? Let's discuss that. So let's say this person, our friend, who just got insured by a company. So he owns a factory, here is a factory, and he got a fire insurance for this factory. But let's say after getting insurance, a fire broke out in this factory. So now what would happen? This person would get the insurance amount, insurance money, but who would estimate that what amount should be paid to this insured person? Or did that person take all these steps to mitigate this threat of getting fire into the factory, right? So all this work is done by the surveyor. As you can estimate from its name, you can interpret from the name, surveyor, a person who does a survey or collects information, right? So this surveyor person, he collects information, he goes to the site or the place where the damage has occurred and estimates and collects all the details about the event, right? And then estimate that what is the loss, what is the damage caused to the insured, and what amount should be paid to him or her as a compensation, right? So I hope we are clear about these three terms. Moving on to our last term, that is third party administrator or a TPA as we normally know it. So a TPA facilitates all the transactions related to finance and helps the insurance company to provide money to the insured person. So let's say now this our friend gets a medical insurance. So medical insurance is very important in today's time, as you never know when who will fall ill. That is why it is very important to get medically insured, right? So now when this person gets ill, he goes to the hospital, and in this hospital all the expenses are borne by the company, right? This person contacts the TPA and TPA arranges all the funds for this insured person and helps him or her to get the money from the company. So these are the intermediaries which support or facilitate the working of insurance company, right? So now you can see how connected insurance and insurance intermediaries are, right? So I hope there are no doubts till now. Okay. Now guys, we have to understand that why are we studying this? We are studying this because we want to know that why has government allowed 100% FDI in insurance intermediaries, whereas for insurance companies, or you can say foreign insurance companies, to come into India, the limit is still 49%, right? Because it is assumed that intermediaries they do not pose a lot of risk to the financial system. So insurance companies, as they are having a lot of clients, they have much exposure to different clients, that is why they pose higher risk, and insurance intermediaries, they pose lesser risk. That is why 100% FDI is allowed in this sector, being less riskier, and 49% insurance is allowed in the 49% FDI is allowed in the insurance sector, being riskier, right? So that is why we are learning about this concept, right? So now can we move ahead to the next question? So guys, here is your second question for the day, which says, why did European Union file against India at WTO? So there is some sort of conflict going on between India and European Union, and now you have to tell that what is this conflict, why has European Union approached WTO regarding India? So guys, I'm waiting for your answers for this question. So Shubham says A, whereas Anurag says C. Nilesh also says A. So let's see what the correct answer is. Let's wait for a little more time. Let's wait for some more answers. Let other people answer too. Gaurav is saying C. Anivesh is saying C. So guys, are there any more answers, or should we proceed to the solution? So Johnson also says C. Vishal Kapoor says A. So guys, give these options a detailed look. Try to understand what they are saying and what could be the implications of these options. What could be the reason behind EU filing against India at WTO? So there is a tie between A and C, I guess. Most of you say either A or C, right? But there is only one correct answer. So Manikanta says C, Indira says A. So guys, I would like to tell you, all of you who answered as A are the correct answers, right? So all those of you who answered A, your preparation is going very well, and I think you're very thorough with the current news going on, right? So A is the correct answer. So basically there was an agreement, or you can say there was a deal between India and European Union when in 1997. So there was an agreement called Information Technology Agreement, or ITA. So under this agreement, it was decided that India would impose lesser tariffs on products related to ICT. What is ICT? Information and communication technology. So all those products like mobiles, laptops and their accessories, all these products, they come under the purview of ICT, right? So it was decided that India would charge no tariffs or lesser tariffs on products related to ICT. But now EU is claiming that India is charging high import duties on such products which EU is exporting to India. And because of these high duties, there is some harm which is being inflicted to companies in Europe, right? So here you can say how duties in India adversely affect the exports of goods from the EU to India, right? So this is EU's claim. So guys, this tussle has been going on from last year. It started in around April 2019 when EU tried to have some sort of talks with India regarding these tariffs, but in May 19, these talks were unfruitful. So there was no result regarding these talks, and after that EU asked WTO, that is World Trade Organization, that looks after all the trade disputes going on all over the world. So EU asked WTO to set up a dispute panel. So I hope you understand what is the meaning of dispute panel. A dispute panel is a body that resolves all the conflicts regarding the trades that are being going on internationally, right? So that is why EU filed against India, because it thinks that India is charging high tariffs on its products, which is harming its industry, right? So now what is India saying? What is India's claim? India says that all those products on whom tariffs are being charged, most of these products didn't even exist when this agreement took place. So that is why India is not violating any agreement, right? So here you can see what is New Delhi saying. New Delhi saying that most of the items identified by EU and others were not covered under the IT agreement, right? So this is the whole tussle which has been going on. So EU tried to have some talks with India, which didn't go well. After that, it asked WTO that please set up a dispute panel, but India blocked this request of European Union. But now, if India is not replying or not responding to EU's claims, now EU can again ask this WTO to set up dispute panel. And since India is not responding to the bilateral talks that EU is trying to having, that is why WTO will look into the matter. So this tussle is going on currently. That is why there is no conclusion to it. So let's see what happens. So as most of you would be knowing that Prime Minister Narendra Modi, he was to visit Brussels on 13th March, that is today, but that trip was cancelled due to the spread of COVID-19, right? So if he would have gone to Brussels, then these talks might have taken place today, but now these are postponed due to the spread of coronavirus, right? So we have to wait for the result, that what happens about this EU's alleged claim. So Japan and US, they are also supporting EU's this claim against India, right? So any doubts regarding this? So Anivesh is asking that are these similar to anti-dumping duties? So Anivesh, these are not similar to anti-dumping duties, because anti-dumping duties, they are applied or imposed when a country thinks that the manufacturers from another country or a foreign country are trying to dump their extra products in their country, trying to lower the price in domestic country, right? But this is not happening here. There is a tussle or there is a conflict. So we have to wait for the results before we can say anything about both countries' claim, right? So WTO is going to decide that which country is right or which country is not. So we'll have to wait for making these such sort of implications, right? So I think we can move forward. So guys, here is your third question for the day, which asks about pharma sector in India, right? This question is asking that what is the outlook of ICRA on India's pharma sector, that is pharmaceutical sector, as provided in February 2020. Earlier, it was stable. So this question is saying that ICRA, that is a credit rating agency, earlier it used to have a stable outlook regarding India's pharma sector, but currently it has given a new rating, or you can say it has given a new review, right? So you have to tell what is the new review that this credit rating agency has given to India's pharma sector, right? These are your options and you have to tell the correct answer. So let's see who answers correctly. So Rajesh says B, Shivam says A, most of you say A, P Venkatesh also says A, that is negative, right? So I think there are more votes for negative Gaurav is saying B, that is positive. So let's wait for some more answers. Okay, Raghav Gupta, he says E, that is contracting. So as most of you have given your answers, I think we should discuss the solution now. So guys, all those of you who answered as B, I'm sorry, you're not correct because the correct answer is A, negative. So A is your correct answer. So this credit rating agency, ICRA, it has revised its outlook, which was earlier stable, to negative, right? Earlier it was stable. So what is the reason behind this change in ICRA's outlook? The main reason behind this outlook, behind this change, is the spread of novel coronavirus epidemic. So you can see how coronavirus is affecting so many things in the economy. It might not have a direct relation, but still it is having a huge impact on economies around the world, right? So guys, India's pharma sector, it is very much dependent upon China for receiving its raw materials. So as you must be knowing that China is one of the major players in the global supply chain. So it supplies a lot of raw material to all the manufacturing firms all around the world. And since China is down because of COVID-19, it is not being able to supply its raw materials to the countries around the world for manufacturing, right? And this is the same situation in India. India used to receive a lot of APIs, that is active pharmaceutical ingredients. What are APIs? APIs are raw materials that are used in the production of drugs and medicines by pharma companies. So you can see how much China is having an impact. China accounts for about 65 to 70%, right? So if China will be down, then APIs will not be, so APIs will not receive Indian companies, then Indian companies won't be able to do their production, right? So that is why, due to the shortage of raw materials, or you can say the other raw materials which are known as key starting materials, so these are building blocks for the production of drugs, right? And in many cases, China is one of the exclusive supplier, the only country, the only supplier that provides these sort of raw materials, right? So that is why India's pharma sector has a negative outlook, or credit rating agencies are changing their outlook on the pharma sector, right? So guys, can we move to the next question? So since I don't see any doubts popping up, I think we can move to the next question, right? So guys, before going on to question number 4, I would like to tell you that we have a Telegram group, and you can join this group and ask all your queries on this group, and I assure you that they would be resolved as soon as possible, right? So here is your 4th question for the day. So this question says, Reserve Bank of India is proposing to set up an alternative digital retail payments organization. What are the requirements regarding minimum paid up capital and minimum net worth, right? So guys, if you remember, in an earlier video, we discussed that RBI is thinking to set up an organization that would look after the digital payments in the country, right? So this is going to be an umbrella organization which is called NUE, New Umbrella Entity till now. So we discussed that it is mandatory to have a RBI appointed director on the board of this new organization. But now this question is asking about the same entity, but it is asking about the minimum net worth and minimum paid up capital that this body should have in its accounts. So waiting for your answers. So Nilesh says A, Khushbu says A, Shubham and P. Venkatesh also say A, whereas Tarun says D. So most of you are answering as A. Let's wait for some more answers. Tarun again says D, whereas Ranjit and Chandan, they say A. So guys, it's a very simple question, nothing to explain. It's a factual question that you must be knowing answer to if you are reading newspapers regularly, right? So Vishal says no idea. Don't worry, you will get an idea after this question. So guys, I think we should move on to the solution now. So the solution is A, the correct option is A. So all those of you who answered as A are absolutely correct. So guys, we already discussed about this entity that RBI is proposing to set up. What would it do? This entity, it would develop new payment methods, standards and technologies and operate clearing and settlement system. So basically, it would promote digitization in the country. And for this organization to set up the minimum paid up capital, it should be 500 crores and it should maintain a minimum net worth of 300 crores at all times, right? And this umbrella entity, it can either be a for-profit organization or a non-profit entity owned and controlled by Indian residents. So it's a very simple question. It does not require much explanation. You just have to know the facts, right? Now moving ahead. So here is your last question for the day, guys. And it says, who is the chairman of Competition Commission of India? So again, a very factual and simple question. You just have to know the name of the person who is heading Competition Commission of India. So yesterday we discussed, in an earlier video, I think yesterday we discussed a question regarding CCI, Competition Commission of India, that is looking to regulate mergers and acquisitions, especially in the technology sector in the country. So let's see who knows that who is the chairman of this commission. So MC Alex says A, Ranjit says E, most of you say E, whereas Srijan Kumar, he says B. So the most votes are for option E, that is Ashok Kumar Gupta. So Prakash Kumar is asking about minimum paid up capital. So it is the capital or the money that a business, that an entity should maintain at all times. So here a minimum amount is given that how much capital should be maintained by this entity. Paid up capital is the capital which is already paid up by the shareholders, or the money regarding that capital has been paid up by the shareholders, right? So that is paid up capital. So guys, the correct option for this question is E, that is Ashok Kumar Gupta. So Mr. Ashok Kumar Gupta, he is the chairman of Competition Commission of India, and as I told you earlier that CCI is looking to regulate global M&As that are mergers and acquisitions among technology giants. So we discussed that how acquisitions like Facebook's acquisition of WhatsApp, they escape Indian rules regarding competition and combinations just because our rules, Indian rules, are based on either revenue or the asset size that companies have in India. So these companies, they must be, although they are giants, but in India their assets or their revenue is not that much. That is why they escape the ambit of this law. That is why Ashok Kumar Gupta said that the new laws would require new criteria that can be acquisition of control, shares, voting rights, or assets, mergers or amalgamations to be deemed to be a new combination under this section. So the new rules, they would specify other criteria other than these two, so that all the combinations of the technology sector can be brought under the ambit of this law, right? So guys, these were the questions for today. I hope you learned something new from these questions, and if you did, then do hit the like button. Don't forget to subscribe to our channel and hit the bell icon. That would help you to stay updated with different news regarding different competitive exams. So guys, we will be back with same session on Monday. I hope to see you all on Monday at the same time. So thank you for watching this video and all the best for your exams.